Hello, we'll be discussing recording as an accounting function for today, and we would be focusing on the 5 W's and your TIPOS. Okay, now since recording is our focus, what are we going to do now? Journalize. No? So let me just remind you that classifying is post. Summarizing will be the preparation of financial statement, and interpreting would be financial statement analysis. Now, what will be our 5 W's in recording? It would be the business entity, and we're going to do transaction analysis. It has to occur so that we'd be able to recognize it today. What Why? Because we have to recognize everything that the business is actually undertaking. What will guide us would be all the standards. Since your who is the business entity, then your focus is the firm, the company, and in this case, sole proprietorship. So from October to December, we'll talk about the sole proprietorship. And the sole proprietorship will be involved in business. And what is crucial will be it has to have an exchange. They need to exchange goods, services, or money with the other party involved. Now, when you talk about when in business concern, remember, when you do something, it can benefit you on a long term basis or it can benefit you on a short term basis. So you would be recognizing it in your financial statement through the balance sheet if it is long term and short term. And if it is short term only, you will reflect it in the statement of operation. Now, what are the form of products that you are going to exchange? It would be goods or services or goods and services. No? And for it to be recorded, it has to be financial in nature and can be converted into Philippine pesos. Why do we do all the recording? Because we are under the conceptual framework of the International Financial Reporting Standards. We have to recognize what we are doing. We are given the fundamental characteristics of relevance and faithful representation as a basis for us to recognize, no? So, how can we summarize this? The recognition criteria you have to capture. And what do we need to capture? What you did. These are transactions, okay, events. What should we include? ALE, asset, liability, and equity. And what's your basis? Faithful representation and relevance for it to be an informed judgment. What will bind this together is the assumption of accrual. Whether you receive the money or not, as long as it happens and it will have a significant effect at your end, then you have to recognize it. Now, what's the typos of recording? So we're going to discuss each one. The first one will be tool, no? And you have two, journal and chart of accounts. And the first thing that we're going to discuss will be the chart of accounts. Okay, let's go to the chart of accounts. And your chart of accounts will be ALE, asset, liabilities, and equities. So there's quite a lot that you can include in your chart of accounts. If you have 10 assets and you have 10 liabilities and you have 10 equities, that will be around 30 chart of uh, 30 items to be included in your chart of accounts, no? Which will be your ALE. Okay. Now, let's define what a chart is. Kasi di ba normally we are separating, dissecting each word. So what is a chart? It is a representation of data. And the reason we have a chart, no, sabi nga art, visual form, for us to have an easier information. You have to go through a process, and when you process a data, it will be an information. And a chart will serve as a guide to us. In this case, the bookkeeper. And what is an account? When you say device, it's a tool. And for us, since we are in recording, then it would be device to record. And the good thing with an account is this would have a description of what had happened to you. And an account has always two sides, which we would adapt. Diba? Sa atin, anong best sample niyan? Debit is equal to credit, or asset is equal to liability plus equity. Then, let me be reminding you that assets are resources, assets, what you own, and assets, you expect benefit from that. Then, what is crucial is the term control. If you are an asset from the IFRS framework, no, timeline will be it has to occur first because we are in accounting. It's all about the past because you expect benefit. Expect will be related to the future, no, of the entity. And then what are we going to discuss? We have 5 items, and this one will not be included this semester. Okay. What we're just going to talk about will be cash, receivable, inventory, and prepayments. No. Now, what is the arrangement of the asset? It is based on liquidity. And what do we mean by liquidity? Liquidity is cash, diba? So, how many steps sa receivable before it can be cash? One. When you have collected already, then that's cash. But with inventory, you have, first you sell it, sometimes on account, sometimes cash basis. So if it is on account, it would now be receivable before it can be cash. Prepayments can never be converted to cash. Why? Pre. That is before. You made an advance payment already. It's prepaid. Diba? Bayaran na. So, services na lang yung in-expect natin dyan. And with your long-term asset, it will only be property, equipment that will be discussed. What will be the arrangement? That would be, your arrangement will be, of course, based on liquidity is not so much a factor. Okay, it's more of based on what is being required by the IFRS. So you have, again, 4 items, and it's just one item that we're going to discuss. Now let's go to obligation. Obligation is a debt to us. Nakakamatay yan kapag you don't actually satisfy your creditor with what you owe because they have claims with our asset. Okay. And a liability is what you did, promise in the past, so you have now an obligation to settle. And this will be from your asset, no? Future economic benefits. Now, what are the items? These are the common items, all of which we'll be able to discuss. AP, or accounts payable, notes payable, unearned income, and other payables. There's no specific arrangement with the liability. Then your long-term liabilities, bank loan, mortgage payable, bonds payable, will be maybe encountering a bank loan in our transaction this semester. Then equity will be, of course, the ownership And this will be residual. That's our discussion before. Now, we say that it is what you owe as well, and these are claims by the owner. And with equity, we have five. Can you remember what are the five items in your equity? I hope you'll be correct. Okay. Okay. And that would be your equity would be original investment, additional investment, withdrawal, revenue, and deductions to revenue, of which you have two: expenses and losses. So let's take a look at revenue and deductions to revenue. Revenue will be a benefit, and this is from normal operation. What do we mean by normal operation? Say you are providing printing services, so that would be normal operation. And what would be incidental to operation of the printing services? If you make deposit to the bank and you earn interest income, or you don't like the office tables and chairs and you sell it already, and you earn from the selling of your old table and chairs, that is incidental to operation, because your major operation is to provide printing services. Okay? How about costs? We know that expenses would be related to cost, and we also know that cost is a foregone benefit, because with expenses you receive the benefit, and with loss there is no benefit. Now, what is the difference between revenue and profit? Of course, revenue is a gross item, and profit is you deduct already an expense from the revenue, so it's a net concept. And when do we have sale? If you sell goods. And when do we have service income and interest income? If you sell services. Okay? These are the products of the sole proprietorship, or of the firm. Then how about expenses? What would form part of expenses of service type? Well, if it's not service type, you can have product cost and period cost. Okay? Remember, you have manufacturing type. So, pag manufacturing type, may product cost ka. Kapag merchandising, ang mangyayari, purchases. Di ba? Yun yung magiging part ng cost mo. And period cost. Kapag a service type, you only have period cost, no? Selling and administrative, no? Now we're done with the chart of accounts. What is the next thing that we're going to discuss? Siyempre, the journal. Okay? O, ayan, unahin natin yung general. Okay? Unahin natin yung general. Ayan, sa journal. Ayan. Okay. Now, gaano kadami yung parts ng journal? 5 yan. Diba? Una mong i-discuss yung, or rather, una mong titingnan, siguraduhin mong may date, yung buwan, yung araw, taon. And you have to give the name of the debit account and the credit account, which will be coming from your chart. The amount, of course, you should have a debit value and a credit value, and that will be from the source document. Your folio or your post reference. What is the account number of the ledger that you have posted the transaction? And so don't forget, you have 5 items. And your brief explanation, you normally identify the who and the what of your transaction. Okay, so this is the information you have to include in your general journal. The date, the month, the day, and the year. The transaction details, the debit account title, the credit account title, and the brief description, the who and the what. Then the folio, the general ledger reference, using the account number. Then the debit value and the credit value. So that's how it should look like when you have posted your transaction. Okay, kasi paid cash on account, paid for car rental, the account number, and the value, the account title, accounts payable in cash, the year, the month, and the day. Okay. So we're done with the general journal. Then let's go into the special. We have four, and for now, what we can use with our transaction will be only general journal after we are done with the accounting process. When we are already in the merchandising, that's we would be able to use all the four. And what are that? What are those special journal? Sales, purchases, cash receipts, and cash disbursement. If you are a service type, of course, you would only have cash receipt and cash disbursement. If you are merchandising, you have all of this for special journal. Okay? Then we're done with the journal and the chart of account. We'll talk about transactions. Okay. Now, how do we define transaction? What is crucial in transaction is exchange. And it should have transfer. Without transfer, it cannot be exchanged. And normally, you have a lot of transactions. So it is a series of collaborative activities. So we need to relate to accounting elements or transaction. And the transaction may either have an effect to the asset and the equities. Okay, that's your ALE. And we divide your equities into liability and capital. In your transaction analysis, we have five. We would be discussing transaction equation. Accounting elements, we're done with that. Your ALE, effects of transaction, theory of debit and credit, and we also discuss the chart of accounts. Okay, so we're done with the chart of accounts and we're done with the accounting elements. Okay, so again, it's five things that you have to do in transaction analysis. What is transaction equation? There's a separate specific material for this. I'll just introduce to you. What is a transaction equation? That for every exchange, no, that you have a value received and a value parted with in any exchange, because exchange is reciprocity. Exchange would involve um, give and take. Okay, so that would be your equation. And our accounting elements are your asset, liability, and equity. Then your effects of transaction would actually be affecting your asset, liability, and equity. And what you can receive can be asset, what you can receive can be liability, what you can receive can be equity. That's also the same with value parted with asset, liability, and value parted with can be equity. So both sides, it will affect ALE. Okay? And when you talk about effects of transaction, it's 5 and 4. You have 9. And it's all about increases and decreases. Kada may matatanggap kang asset, tataas yan. Na pwedeng ang mangyari daw, tumaas yung obligasyon mo o tumaas ang equity mo. Ganon din, kapag ka nabawasan yung asset mo, pwede daw na ang nabawasan yung liability mo o nabawasan yung equity mo. So the combination will be around 9. Then the theory of debit and credit. For everything that we receive and everything that we parted with, it will always relate to debit and credit. So, since we always talk about 5, and what is the best thing for you to remember? That you have two hands and you have left and right and you have 5 fingers. Isn't it that's what's normal? I have two hands, no? Left and right. Kasi if you have 5 items, 4 items, that you have 9 rules of debit and credit, let's take a look at the definition of what a debit is. Left. Kita nyo, left. O kita nyo, nasa left ba yung debit? Oo naman. Eh di ano yung credit? Nasa right. Diba? O yan. Kaya yun, right side of an account. Do you remember our definition of account? Two sides. So how do we call now the side? The left and right side. Debit and credit. Kaliwa kanan lang pala siya, no? Yan. So, how is your debit theory and credit theory relates to transaction equation? Basta daw may tatanggapin ka, ilagay mo sa kaliwa mo. At may ilalabas ka, ilagay mo sa kanan mo. Ano yung pwede mong ilabas? Ale. Ano yung pwede mong tanggapin? Ale. Value received is ale. Value parted with is ale. Okay, we call it debit and credit. Okay. So you have 9 rules and we'll have a separate material for this. Okay. So, taking a look at your transaction analysis, what is again our transaction equation? Value received is equal to value parted with. And all that will be received will be accounting elements. All that will be parted with will be accounting elements. And every time that I receive, it might increase or decrease my accounting elements. Thus, we're going to have 9 effects. And where should I put it? Debit or credit? Since I have 9 effects, I also have 9 rules of debit and credit. And for me to properly account, to give a proper name, an official name to what had happened, I'll be using chart of accounts. Now, we're done with the tools, okay? We're done with the input. Let's go now to the process, journalizing. And what do we use in journalizing? The double entry system. And you have to remember, it's just at least 2 effects. Kasi you have value received and value parted with regards to your accounting elements. But all in all, the effect will be around 9 types, no? So, if we are done with journalizing, we can go now to the output of journal entry. And what are the kinds of journal entry? Pwedeng simple, pwedeng compound, no? Simple, pag there's only one debit and one credit. Pag compound, it's a combination of, let's say, 2 debit, 1 credit, or uh, 1 debit, 2 credit, or 2 or more debits and credits, okay? So, what's the last item? Source document. And as example, we discussed last time, official receipt if it is cash provision of services. And if it is on account, you'll have an invoice. Why do we need this? Because we have to have an evidence which would support faithful representation, reliable information, and it would give a basis for the value or the amount of the debit and credit, because we say garbage in, garbage out. And we need to support auditability of the system, and that's all about evidence provided by proper documenting your transaction through your source document if it is under journalizing and recording function. Okay? Now, tipo mo na ba ang accounting? I hope so that you won't find difficult, no? And you won't have problem and matipos. Okay? So, can you now tell me what are the tools used? It's 2. Okay? Hope you answer already. Input. What's our input? Let's see if it'll be correct. Process. Output. Okay? And storage. I'll check your work. Tama? Are you correct? So, the blue one are directly affecting accounting as a whole. And the red one will be specific for the recording function. It's just J, all about J. Diba? And so we have to have our 5 W's As a review with recording, do we really know who are we recording? Yes, the sole proprietorship. And what did we do? We have 5 steps in transaction analysis, and all events that had happened, I need to record with the guide of recognition criteria from the Philippine and international standards. So, what are the specific concepts and assumptions and principle? We have business entity, for who and for what. We have the qualitative characteristics, for when, short-term periodicity, going concern for short-term and long-term, and your recognition criteria is based on accrual. Okay? So thank you for listening. I hope you learned something today. Any question? Just give your feedback so that we can address it outright. Okay? Good day and keep safe.